Welcome back to the Fire Grind. My name is Daniel, and on this channel, we talk about personal finance. And we have a focus on the stock market as a way to grow our wealth. If you haven't checked out my previous video on the very good food company, this is possibly the next Canadian Beyond Meat. They're a plant-based company in Vancouver, or Victoria, BC, and they just IPO'd on the Canadian Securities Exchange. And they have a market cap of $54 million. But I think they have huge potential ahead of them with a growing demand for plant-based meats. And I think they're going to be able to do well to catch up to other companies like Beyond Meat and Impossible Foods, just based off of their branding. So in today's video, I'll just be talking a bit about the news that's been happening this week, as well as what I think is going to be happening in the market this coming week as well. So we're going to look at a few articles here today, so let's jump right into it. So if we go into the first article, we can see that this article actually talks about the jobs report that's going to be coming out this week. And I think analysts believe that the Labor Department will report a 3 million increase in payrolls after the 2.5 million that we had last month. So this will actually bring the unemployment rate down to 12% from 13.3%. So this could be good news, but I believe the market has already priced this in because analysts have already come up with this prediction. So if the Labor Department actually reports 3 million, then I guess we won't really see much movement in the market. But if it's either significantly higher or lower, we'll probably be seeing some movement based off of those numbers. So my guess is that, yeah, I think it's possible that there is a 3 million increase in jobs, and that's probably mainly due to the US economy opening up again. However, if we jump over to the next article that we're going to be talking about, it highlights what's been happening with COVID in America. And here is actually the most important part in this article to me. It's that cases are actually back on the rise in more than 30 United States. 30 states out of 50 states, that's actually roughly like 60%. So these states include Texas, Arizona, California, Florida, and Nevada. So I think Texas, California, and Florida are actually quite major states in the US that hold a lot of business. If New York was in there, that would actually be even worse. Luckily, New York isn't in there. And if we look over to this next article here, we can see that California actually joins Florida and Texas in reclosing bars over the virus surge. California is going to be closing down bars, and who knows what else they're going to be closing down afterwards if we continue to see a rise in cases from COVID. So I think it's best to watch out for what news is coming out of these states and what's going to be happening, whether things like malls are going to continue reclosing, because I believe malls have opened up in these areas. However, this will probably be reverted if cases continue to surge. Actually, let's quickly jump over and just search up what the cases are like. So let's see. So if we look at coronavirus cases in the United States, so you can see the trend right now. It's relatively flat, the new cases. They're actually dropping up until around June 15th, and we've seen that number just continue to uptrend. So if we go into different regions, let's see, California. So in California, wow, we had a pretty big spike, and it's actually been on the rise since March. The number of new cases, see? We had a huge spike on June 23rd, and it's kind of been settling here. And this just might be because summer is coming around, people want to get out. So a lot more people are out and about, and the virus is able to spread that way. If we look at other states, let's see New York, for example, just to see a state that has been reported. So New York, actually, the news is pretty good for New York. Seems like they've had their cases under control, and it's flatlined in the number of new cases and probably will decline, hopefully. Flatline might not be good because this could mean that the cases could all of a sudden surge right back up because other states are showing that as well. And summertime is really rolling around for New York right now. And, the weather's getting a lot more hotter. People are taking vacations because it's nice and warm outside. They want to go out into the city. So maybe we could see a resurgence in cases, but definitely pay attention to New York. If we look at Florida, yeah, look at that spike. That's not looking so good for Florida. They've increased by more than 10 times, roughly 10 times actually. This is not looking good for the United States, and I think this will definitely weigh on the stock market. However, it probably won't weigh as much as the initial shock because people kind of understand what the effects of COVID are. They know which businesses are most impacted, and those ones have sold off. But I wouldn't expect those businesses that have sold off heavily, such as travel, for example, like the cruise lines or airlines, they might just see their stocks stay fairly flat and not recover because they've already dropped quite a bit, some of them as much as 90%. So if you're looking to buy into airline stocks for a quick gain right now, I would expect airline stocks not really to move because cases are actually surging back up, and there's no real good news to continue to move them up. So the next thing that we're going to look at is just the headlines for Sunday. So if we look at the top headlines, we can see that the virus is mentioned in the first one, the second one here, the third one here, the fourth one here. I believe this is actually talking about the virus because the Philippines parade here is, people are frowning upon it for people being out and about and too close together. Another one here. This one doesn't actually have anything talking about COVID at all. And the seventh one here talks about COVID. So roughly 6 out of 7 articles are negative news about COVID right now. Like gold rising is basically investors taking shelter in gold, basically meaning that investors believe that economic times are not looking so good right now. So they're piling their money into gold. So we can see other countries have their cases also climbing, like Korea, Vietnam as well. Here you can see their cases are rising. But here are the Saturday headlines, which actually, save this tab. We can see that Korea reports 62 new cases. China has 17. Who knows if this is actually 17? It might be a bit more than that. But I believe these are actually communal spread ones. So if we take a look at Saturday's headlines, we can see that a lot of the headlines are also talking about the virus. So you can see the first one, the second one, the fifth one. This is actually in India here in Delhi. There's a lot more cases in India. And then talking about the US. So 2 other articles on the US. So roughly 5 out of 7 top articles on Yahoo Finance are talking about, resurgence in cases in COVID. So this is not really looking good in my opinion. So I think this will, as I mentioned before in this video, this is definitely going to weigh in on the economy in the next couple of weeks at least. In other news though, we can see that oil here, this is actually an interesting article that I saw on the front pages of Yahoo Finance. Chesapeake Energy, this is actually a stock that one of the YouTubers that I watch, Ryan Scribner, he talked about Chesapeake before. He actually made a portfolio that was, I think, play money, and he had Chesapeake in it. And Chesapeake Energy is actually filing for bankruptcy protection. So what Chesapeake does is they're a shale drilling pioneer. So basically they're an oil company in the United States that are drilling using a method called fracking. And fracking used to not be profitable because it costs so much to do. However, as oil prices rose in the early 2010s to 2015 or so, fracking started to make sense. And a lot of US companies started to pop up to do fracking because, this is going to be huge. Oil is, pretty profitable business when you get into it. So a lot of companies threw in money into building out equipment, purchasing sites to do their fracking operations. However, right now with oil prices so low, these companies are getting hit very hard that they have to file for bankruptcy protection. And it's not just Chesapeake Energy that's doing this. There were more than 200 oil producers that have filed for bankruptcy protection in the past 5 years. So this trend is expected to also continue as a global pandemic saps demand for energy and depresses prices further. And the reason why, oil prices are going down is because less people are traveling to work, less people are taking flights. So that means the demand for oil is actually significantly less. You can kind of tell this when you go onto the road. Traffic jams aren't as bad as before, or maybe areas don't even have traffic jams anymore because people aren't going into the office, rather they're working from home. And not many things are open, so less people are actually going out and traveling during the weekend as well. And people aren't even going out for vacation. So summertime, the gas prices usually go up because everyone's either driving to the cottage or taking flights. So, the demand for oil is a lot heavier in the summertime versus the wintertime. So Chesapeake Energy, although they're not declaring bankruptcy, they're filing for bankruptcy protection. But, this isn't a good sign. It's possible that if they're unable to work out their debt with their lenders, they could eventually file for bankruptcy. And 200 other oil producers are doing the same thing. And if oil prices don't go back up, these fracking companies are just going to disappear. And 200 companies producing oil in the States, think of how many people they employ. Those people are going to be on the unemployment line and looking for jobs and living off of stimulus checks. So this is actually not good for the economy because these people who had jobs before, now they're relying on government money to be able to continue to survive. And most of these people are probably living paycheck to paycheck as well. So, as more people become bankrupt or can't pay their expenses, people default on mortgages, and this could cause some more economic stress. So look out for, the oil industry in the States, because this is going to be a big one going forward. Next thing we're going to do is we're going to jump into the charts. So first we're going to look at the TSX, and then we're going to look at the S&P 500. So right here on the TSX charts, last week I said the TSX was going to trade in between the 50-day moving average and the 100-day moving average band. And if you look at the past 5 candles here, that was last week, it did trade between those two moving averages. The reason why I said that is because last week I didn't really foresee any major news coming out. There weren't any earnings coming out really that would move the market. So I figured the market would trade relatively flat. So it declined a little bit. Overall, investors aren't overly bearish or overly bullish. So stocks ended up trading relatively flat. So going forward this coming week, what I think is going to happen in the TSX, I think we could actually be testing this 100-day moving average. And this is because of all the negative news that we see coming out with COVID. And although none of this is actually related to the Canadian markets, the Canadian cases here, in Canada, we're actually doing quite well. If we jump over the charts, we can actually see the cases in Canada are actually dropping quite significantly. So we're doing quite well in Canada. However, the fact that we're actually tied to the US economy quite significantly, this is what's going to move the markets lower in Canada. Because a lot of the Canadian investors also trade on the American markets. And if the American markets aren't doing well, that's going to affect Canada. And therefore, the Canadian markets are going to slump. So I think that this next week, we'll actually test the 100-day moving average and possibly even drop below. So those are my predictions for this coming week for the TSX. And if we jump over to S&P 500, we can see that we ended below the 50-day moving average last week. However, we started above the 50-day moving average and dropped below. So I think we might bounce around the 50-day moving average in this coming week with all this negative news. And despite there being negative news, I think there's still a lot of buying pressure coming from a lot of beginner investors, like on Robinhood, for example, that is going to help keep the markets at the 50-day moving average. I think near the end of the week, we might actually see a sell-off, and that's probably when a lot of the hedge funds will be unloading their stocks. So I expect to see going through this following week that the markets will, test the 50-day moving average and sort of bounce around, and near the end of the week, it'll probably drop down below. And the 50-day moving average will end up becoming some sort of level of resistance versus being some sort of level of support, as we saw in the past, I think it was 2 weeks ago or so, where we saw 2 candles that were kind of testing the 50-day moving average, and it bounced up above the 50-day moving average. So those are my predictions for the coming weeks in the general markets. And if you're wondering what I think about each individual industry, I think that tech will probably stay pretty flatlined, if not move a little bit higher, just because investors are getting out of other sectors and want to look for a sector to put their money in that's relatively safe. So I think they'll be piling their money into tech stocks because tech stocks are relatively immune from this whole COVID business. People are still able to work from home. Software is still, a very necessary part of society for other businesses to continue to run or survive. Tech stocks will likely be the new gold stocks, quote unquote. And I think that tech stocks will stay flatline pretty much. The sectors that are going to really suffer are probably your retail sectors and restaurant sectors. Things like, Texas Roadhouse or any sort of clothing stores, those might suffer, especially mall REITs. These are probably going to suffer even more. And I think this sector can be summed up in the consumer discretionary. These businesses are going to be hurt the most. So expect to see some sort of downturn in consumer discretionaries and expect to see tech relatively flat. And possibly grocery stores will actually see a bit of an uptick because, restaurants and bars are closing back down, which means people have to cook from home. Grocery stores are definitely going to see their stocks probably rise because people need to buy groceries because they can't go to eat anymore. So that's pretty much all the news I have in today's video. If you enjoyed the content that I released here, leave me a thumbs up, as well as any comments that you have down below. Any other news articles that you guys have seen, definitely link them down below for other people to read in terms of what you think is going to be happening in the market in the coming few weeks or even in this next week. If you have your own opinion that you want to leave down below, I'd be welcome to hearing that out as well, because it'll definitely help me learn as an investor and help others who come along this video as well. Keep up the grind and have a great day.